Gentlemen, thank you very much for joining the CNBC TV18 boardroom. Thierry, the first question is, it appears the macro environment has become a little worse. The reduction in discretionary spending has only accelerated because last quarter your revenues had declined by 0.6% and this quarter your revenues have fallen by 2.8%. So has the demand environment worsened in the last 3 months?
Reema, I mean, if you remember when we spoke last, we had guided for this quarter, between 1 and 3%. So this is, within, the range that we had, assumed 3 months ago. The reality is that, we continue to have a market where there's a demand for technology, where we have deals, where we actually sign more large deals than we used to sign in the past, and also a market where there's a reduction of discretionary spend across industries, in my mind. Now, with some industry probably more impacted than others, the banking, financial services sector, the communication sector, the technology industry, certainly. So I'm not sure, Reema, I would necessarily say that the market is worsening. I think we continue to be in this market where there's a certain level of uncertainty that drives some of the behaviors of our clients to be a little bit cautious when it comes to discretionary spend.
Okay. You spoke about the discretionary pressure being more in BFSI, tech, telecom. Do you think any of these verticals are close to bottoming out, Thierry?
That's the question. In one way, I feel that a lot of the budget that have been set for this year have not necessarily been spent, and there might be a moment in time where some of the departments will decide to resume some of those unspent budget. It very much depends on what we are going to observe in the next few weeks. I mean, we are looking at it. The nature of a slightly more volatile market is that decisions can come at any moment in time. The reality is today we are not necessarily seeing it, but we are not equally seeing any deterioration of the situation. It is more or less the same market that we have seen for the last, I would say, 3 to 6 months.
Okay. So as of now, do you have the confidence to say H2 can be better than H1?
It's not even a problem of confidence. I think it's, I'm just one, as you know, Reema, we are not communicating or guiding beyond the quarter, but the reality is that I feel that for our industry, projecting for the second part of the year is a little difficult in the current context. So we probably need to be a little bit patient.
Jatin, current margins are at 16%. What will be the impact of wage hikes in Q2 and Q3 on the margins? So how much lower do you think the margins get on account of the wage hikes? And do you think there is a case to moderate the overall wage bill by maybe doling out a lower percentage of hikes?
So Reema, thanks for your question. I would let Saurabh speak a little bit more about the wage hike, but purely from a P&L standpoint, I think I'm sure you noticed that in Q1 it was it was operational improvement that drove the margin performance, where we kept margin very stable even when we had a certain amount of softness in the revenue, and in fact improved utilization, improved overall execution of our projects, and so on and so forth. So we do have sufficient levers that one can continue to engage in to deliver a stable performance around the range that we operate in.
So exit margins in Q4 FY24, Jatin, will be similar to the 16% we are currently at?
So Reema, we will continue to improve our rigor on execution, and we will keep the current range as a minimum number that we deliver, and whatever flows through, flows through.
So current margins are the minimum, which means 16% is the lowest in terms of margins. We've hit the bottom there. Okay. Sort of very sharp headcount reduction of 8,800 employees this quarter. What happened?
Reema, Thierry spoke to you about the macro environment. We spoke about the uncertainty. And our intent is to use this time to make the organization more efficient, agile, delayer, and I think bring in more efficiency, drive productivity. And that's what we've been working on. And that's what you saw in Q1. We'll continue to do that. And that has reflected in some of the headcount reduction. It's also about the hiring is muted, So utilization has improved. So we have people to be deployed onto projects. We feel that there is headspace for us to improve utilization further. That's an important lever for margin, as Jatin called out. So all these things put together, I think it's just the organization is becoming more agile. You move to four GBLs, more closer to the clients. It's just the right thing for us to do.
So do you see this type of headcount decline continuing?
I think we'll continue to calibrate our headcount depending on demand, very clearly. We have given a range, so it's not about a number we are driving or anything we're chasing. There are pockets where we are hiring. There are skills which we are acquiring and expertise. There security, engineering, data, AI. We continue to hire. So we will continue to hire where we need people, and we will make it more efficient where we need. There are pockets where we need to create more efficiency. So both will happen simultaneously. We are not driving a number. We're just making sure that we are in sync with what is happening in the macro environment.
And sort of the overall wage bill, would you look to defer the wage hikes? Will the quantum be less? Will the senior management this time take a smaller percentage of hikes just to bring in a little more cost optimization and rationalization in this environment?
So one is, we had given our last wage increase in September last year, and we are looking at doing the next increase in Q3. So it's not a deferment, kind of just moving it a bit. And we will be in line with making sure that we reward the high performers better, the critical skills better, and in line with what's happening in the market. So we will do it in that fashion. And we haven't gone in depth on that. We still have time. And we will see what's happening in the market as we move forward. So we will do a much comprehensive approach to looking at it rather than painting one brush across the organization. So that's will be the approach when we looked at merit salary increases in Q3.
Thierry, while the total contract value, TCV as you call it, is still looking very, very good, the large deal wins have gone up on a quarter-on-quarter basis, you've stopped sharing the annual contract value of deals for the last 2 quarters. And that number is important considering that the short-term discretionary spending is coming down. Could you tell us, maybe not in numbers, but at least directionally or a broad percentage, broad range of what are the ACV numbers looking like compared to what they were some time back?
The reason why we are focusing on TCV is because this is what's driving the focus on the larger deals. This is what's driving the attention to, not only, getting orders for a few weeks or few months, but really getting our people to engage with clients on deals that are more transformational, that are more long-term, that are larger in size. And that's how we've done it. And the reality is that ever since we've shifted our focus to TCV, we've seen significant improvement of the volume of TCV quarter after quarter. We've seen a significant increase of large deals quarter after quarter, and so we continue to do that, and that's how we believe this is the right way to drive the growth of our business.
Okay, and one final question, Thierry. You've spoken about the investment in generative AI, $1 billion over the next 2 to 3 years. What about the revenue from generative AI? In the next 3 years, if your investment is $1 billion, what could the revenue look like?
It's a good question, and it's not necessarily easy. So there's different points of measure of this. Keep in mind, Reema, that AI is pervasive. It's everywhere. You have AI applied to security contract. You have AI that must be applied to programs around data, around engineering, cloud, and so on. And so the reality is that you will see the vast majority of our business being injected with AI technology, whether it is to respond to clients' expectation or the way we run our own business. And so, what we are looking at is, certainly the progression of the number of contracts that we have in AI, in generative AI, and we have dozens of them active at the moment. Also, the number of our AI experts, if you like, who are working on this type of projects for clients. And finally, the proportion of our business that will be completely AI embedded, if you like.
Thierry, Jatin, Saurabh, thank you very much for joining in. Wish you all the very best.
Thank you.